Good morning. Welcome to the throne room. Appreciate having you guys today, man. Enjoying this topic, enjoying this show, man. I just want to welcome everybody to the throne room. I just want to thank everybody for listening. I want to thank everybody for, making it through this year and getting to this point. Celebrate yourselves, man. You deserve to be celebrated. Celebrate yourself, man. It's time to celebrate equals. Yeah, man. So yeah, man. I want to get into a powerful topic of creative real estate investing. Of course, I want to shout out our website, thehiddenmajesty.com. Of course, you can find me at negusa.thevincentcoolteam.com for realtor needs, realtor questions, things of that nature. But I've been studying creative real estate investing for about 7 months now. And there are fundamental principles that I learned about it when going into investing that I thought I should share today with you guys. If you guys will bear with me, there's some fundamental principles and strategies that you can use when analyzing potential properties to ensure you get all the available facts and you don't make any presumptions on your investments. So let's get you to a great deal, man. And what I want to do is, go over some of the things I would look for when investing in a property. Now, one of the things I will look for is finding out if the area is desirable enough to live and work. You want to find out if the area is desirable to live and work. So when your investors, right, say your buyers, right, are coming to the property, they are taking in all the information and they're factoring in the fact that the area is desirable to live and work, right? People need a place to work, travel, commute back and forth, good neighborhood. There's no break-in, no robberies, things of that nature. Of course, you have the Citizen app that can tell you a lot of things about the area. The second thing I'm going to look into is the type of properties that was built over the last year that would indicate what the people are looking for now, right? So I'm pretty much looking into the properties that are up to date, and I'm looking for what the people are looking for and what style, what amenity, what feature, what area, right? What do people look for in homes? So I look for what's just been bought, what area, what features, amenities are in this property, and even what price it is. And this would help me educate myself on what to invest in. Another thing I look into is, the property zoning, right? I look into the property zoning to better understand my real estate investment and potential for reasons of it being in a zone that is profitable and attractive. So I want to make sure that is an attractive area where one would want to invest in, because I'm further researching if over the past year are more people leaving the area or whether more people are moving into the area. That is also factored into the investment, because you never know if property price has been dropping or it's been increasing, and you may go into a bad investment based upon not knowing if it's fluctuating in the area and your profits are doing the same. So these are all questions you need to ask yourself, right? That way you have as much knowledge as possible when it comes to investing in a property, especially when it involves investing your time and your interest. You want to do a very thorough practice of analyzing properties in your particular area or field of interest, right? Meaning that you want to go over the pros and cons, of course, right? If you're like me, right? And the way in how you go over these pros and cons, what do? You got to study the comparative test. You got to do your comparative test. You got to study the market. So pretty much you need a clear idea of your field of interest, right? You need a clear idea of what you're looking for. You need a clear idea of what type of property you're looking for. You need a clear idea of what's going on in that area, what's going on in that market, what's going on with the price, what's going on if people moving in and out, are the prices dropping, are they increasing? You know, you wanna find out what people are buying. What are they interested in? Are they interested in duplexes? Are they interested more in vacant land? Or are they going for the distressed homes, right? Because all these things count when it comes to real estate investing, especially now. And then when you go into that particular field of investing, you want to make sure before you invest into it, put together a rough repair cost, right? Do your research, right? How much would a handy person cost? Your handy person cost, right? Factor in the contractors, right? The amount of money you'll spend fixing the kitchen or the bathroom or the bedroom, right? You got to consider all these things, right? And then you got to consider, what are the repair time frames? You know, how long do you think it would take? How long do you think it would take just to fix a few things in case the buyer doesn't like certain things? You got to go right into detail, like things like, what is the cost of the ceramic tile per square foot? All those things factor in, right? So what we do is we factor these things in to help us decide if a property is a good investment. And if I offer a deal, I want to understand all the costs involved. I want to be able to explain to my client, these are the costs. This is what the property is worth. This is what's going on. Right? So I'm educating the client on as many factors as possible. Another thing I want to research that a lot of people don't really go into is, especially when you're dealing with condos or apartments in particular, like, what are the property rental rates, right? Meaning, like, what are the current rates per square foot of the property, right? Because they count that into the cost, right? And it's added to the rent. So I'm pretty much looking for the rate difference in the number of bedrooms and bathrooms when it comes to the current rates per square foot of the property. I got to factor in what the rate is in the different numbers of the bedrooms and the bathrooms. And if I were to rent out this property, I know the average amount of water and utility and electricity bills, if they're even factored in, that goes into the rent. Because when I'm dealing with investing in a condo, I got to factor in these variables. So this way, you know, I can accurately judge what I can charge for the rent, right? So I invest most of my time in going over, you know, various properties versus in my first desired property or my first couple desired property. Like, I make a point of like breaking down the investment property at least, you know, one of those properties a day. So that way I can get a more accurate, analogy on the figures and potential and of the profit margins there. And that's important. So I definitely focus on having a plan, right? Don't want to deal with delayed gratification here. I want to utilize my resources and I want to take action. And I want to go into, like, say, wholesaling strategy. And when I go into wholesaling strategy, as far as like being a middleman when it comes to selling homes, there's two factors that I go into when it comes to wholesaling strategy. And that's the after repair value and the maximum allowable offer. Right? And when I'm performing after repair value, right, I gauge whether the property will be as good as of an investment as it actually appears to me. Right? So the way how I do that is that I consider the cost. I consider, well, how much time will it take to repair the property? And would this determine the market profit versus the market value after the repairs? So I'm carefully looking into that, because in the long term, I want to make sure that this gives me a stable profit despite what the market is doing. Right? So when you're going through this, you need to be able to show, for one, that you have the funds to finance the deal, right? Because you're gonna have to finance it, of course. And like, kind of go over like where are the funds coming from? Like, are you borrowing cash through traditional lenders? Are you borrowing cash through transactional funding? Right? Because when you're dealing with things like, say, I don't know, a double closing, there are two contracts involved, right? That's one between you and the seller, and the one between you and the end buyer. So you're kind of being the middleman here, where you're trying to get the end buyer to buy the property, but then you're trying to get the seller to sell you the property. And the beauty of this double closing is that if you have the funds to finance this deal, you can maximize your profits. That way, the seller or the buyer, they both know your profit margin, right? So that way, everybody's clear on, all the risk of buying the property, right? But you got to be able to find your end buyer, right? Someone who's willing to work with you, somebody who understands your plan, somebody who believes in your plan, right? Because you don't need a buyer just backing out the deal because you were in like full swing with the seller. And the property isn't yours until you actually first close it with yourself. So make sure in the agreement there's full descriptive detail on what the buyer gets out of the deal and any liabilities that you may encounter if you don't secure the deal or the property with your seller. That's very important. So you can use strategies like transactional funding, right? Or some people may call it flash cash. But at the same time, transactional funding is like a deal, right? It's pretty much an ideal solution when it comes to wholesaling. It allows you to get funds quicker, right? With the clause that's due back almost instantly. So you get a return that's due back almost instantly. So it's pretty much like a short-term bridge loan when you really think about it. And pretty much for it to work, you're gonna need a seller willing to sell you at an agreed price and a buyer willing to purchase from you. And the buyer needs to be in place beforehand. Like, you always gotta have your buyer on deck. And that way, once you purchase, the buyer needs to buy. There cannot be any delays, or you will not be able to repay the loan in time, right? Because that's your goal here. You're trying to repay the loan. So this flash cash, it often draws the interest of anywhere between 2% and 12% of profit in the deal. And when you're using the strategies of creative real estate investors, you got to have the cash that you need to commit to the contract with the seller, right? So that way you can quickly resell to the end buyer on a separate contract, right? So this is only when you're using transactional funding to ensure both transactions are closed quickly. So these are strategies that you use when you want to be the middleman and you have a person that is willing to lend to you, and you have an end buyer that you set up, and you do the information, you do the after repair value, market analysis, and all the research that you need to do. And this is where creative real estate investing starts to work for you. But you got to make sure these players are in position and your information is in position. But if you enjoyed the show, let me know. My time is almost up, man. Please listen to the program every 21. Please visit niggas.thevincentcreateam.com. And thank you for watching.